Let's get in Sandeep Shah, CEO of Sampriti Capital, who joins us right now with his fundamental perspective. Sandeep, good having you. Thanks so much for joining in. This is Neeraj here, morning. What's your sense, Sandeep, of how do we shape up trade in view of all the macro events that are slated up? I mean, the Greek elections, the RBI policy, and the G8 meet as well end of the month.
Well, I guess, the markets have actually rebounded broadly from my target range of 46 to 4800. We actually dipped below 4800 on a couple of occasions, and we've bounced back from those levels. Because, broadly, if you want to understand, if you want to give a macro perspective, I think the important thing is that, monetary policies is loose or is loosening all over the world, whether it's US, even if they don't do QE3, they still are actually loosening. In the euro, there's a very good chance, especially if you have a negative outcome from the Greek elections, that there might be an LTRO3. I just hope that it's got more to do with, not just for banks, because banks already have a lot of toxic debt in Europe. And in India, of course, we are likely to see at least 25 bips interest rate cut, if not more, if not along with the CRR cut. China has also cut rates. And in this environment, where expectations are very low from the Indian government, a little bit of positive news leads to a lot of short covering. But I think, I think that obviously if the key question is not just the outcome of the Greek election, but, in terms of the contagion, or whether there is contagion or there isn't, and whether it leads to a full-fledged euro quake or not. And that's something that we'll really find out based on the reaction of the ECB to the Greek election outcome. So I think we'll just have to wait for that. But I think, given that markets have bounced back a little bit, given that, the severity, if there is, for example, the RBI governor has had a reputation of actually surprising markets, or even shocking markets, I would say. So if in the extremely unlikely event that we don't have an interest rate cut and we have a negative outcome from the Greek elections, I think we could go back into the range that I was looking at on the downside, which is 46 to 4800. So it might actually make sense to actually buy some protection ahead of these events.
So Sandeep, how would you trade the entire banking pack in the run-up to the policy?
Well, we don't necessarily take such short-term views in terms of trading up for 2 or 3 days. That's not really what our approach or our style is. So, for me, there's really nothing to be done ahead of the credit policy outcome. I mean, we already are invested, and I've recommended our clients to stay invested in the private sector banks, and we continue to hold those positions. But, if stocks were to rally 10, 20% from here ahead of the RBI policy, we may perhaps look to trim some positions simply from a risk management perspective. But having said that, if we see a significant interest rate cut, if you see close to say, if we see both a 25 bips CRR and a 25 bips repo, or we see a 50 bips repo, in that case, I think the argument for public sector banks starts becoming a lot stronger. The valuation argument has always been in their favor. What hasn't been in their favor has actually been the NPA cycle bottoming out. But I think that if we see those kind of cuts, then I think one would be willing to preempt the NPA cycle bottoming out and take some small positions there. But I think that might perhaps be more after the event rather than before the event.
Sandeep, how do you play auto now? Not from a near-term perspective, but there are two contradicting or conflicting forces at play. If at all there is a 50 bips repo rate cut, then it's positive. But there's all talk about the raising the prices on, or raising the duties on excise duties on diesel cars, and has been a spoilsport for these companies, even a Maruti, which has got a largely petrol sales-driven model. How do you play auto?
Well, even the last time I was on your show, when I said that 46 to 4800, we might look to buy auto stocks, which is only two-wheelers. I had mentioned very clearly that we would wait to see whether we see a petrol price hike and whether we see a diesel price hike, and then only would we actually look to buy out there. So if we don't see a diesel price increase, but we see an increase in diesel engines, it's going to affect everybody. I mean, even Maruti has 40% or so of their sales coming from diesel cars. Maybe an M&M out of the utility vehicles and cars may have a much higher percentage. But the point is that everybody has a very large percentage of volumes coming from diesel cars. So you want to wait for that. And the call that we've been taking is that, we've been more positive on the two-wheelers And the part of the reason is that in an environment where petrol and maybe perhaps even diesel price or diesel price engines may go up, there is a chance of down trading, and that people might actually switch more to two-wheelers. And in the case of Hero Honda, they're doing very well in the economy segment. And if you were to look at Bajaj Auto, even though there are short-term pains, they obviously gain from a falling rupee. So, both of them are different plays. So the focus would be on the two-wheelers rather than the four-wheelers till such time that we actually see the events pan out and see the effect that these events have on volume terms. It's not just saying that, okay, diesel price hikes happened or a diesel price engine hikes happened, stocks has corrected, time to jump in. Perhaps you could nibble there, but to really invest, you might want to see the impact that it has on volumes before you actually jump in.
Sandeep, just wondering, in fact, I'm guessing your answer is probably a no, because everybody that we've asked about this is saying a no for looking at making any kind of investment decisions on construction, at least the mid-sized ones, despite the fact that even if they believe that there is a 25 to 50 bips repo rate cut in the offing. What's your sense?
Well, the last time I was on your show, I had mentioned that we would look at infra construction as actually at best at trading plays at this stage, till we actually got into a stage where the environment became more conducive and we started seeing action happening on that front, on the regulatory side as well as clearance of approvals. I suspect that a lot of these stocks have already rallied a little bit. And just as we are getting into a fairly heavy news flow kind of week, that's not the time that you really want to add risk in your portfolio. The time to add risk is, when either stocks have corrected significantly or the environment is that much more conducive. So to repeat, I had mentioned last time that there could be trading plays at best because the environment is still not conducive, but not at this stage, not now.
Sandeep, before we let you go, I'm painting a hypothesis that nothing too untoward comes out of the Greek elections and the RBI goes ahead with a 25 bips repo rate cut with commentary which is not hawkish and a 50 bips CRR cut. So it's all positive for the market is the kind of scenario that I'm painting. What would you advise investors to look at very seriously? Sector maybe, or if you've looked at some specific stocks which you would look to get into?
Well, we've continuing to advocate in this correction to actually buy, consumption stocks, pharma, buy two-wheeler stocks, as I mentioned, buy the private sector banks. So I think, given that we had recommended our clients to be in between 40 to 60% cash, we've actually been looking to deploy that cash, and we will be recommending actually to actually deploy in those sectors. I think whether we buy infrastructure, capital goods, or whether we buy perhaps property stocks will actually be a function of the environment. And here when I'm talking about environment, I'm really talking about whether the government is making approvals happen, whether they're able to actually control the fisc, which I think is terribly out of control, whether they're able to move on some, perhaps a few key pieces of legislation, whether we see a new finance minister, whether we see a new prime minister. I don't know what's going to happen. The whole political situation is in a bit of flux. But yes, the idea would be to deploy cash and buy for sure, because I think then the upside could even be 54 to 5600 on the Nifty. But the precise levels would depend upon whether this is accompanied by government action or whether it's accompanied by government inaction.